Hello and welcome to the look ahead for Tuesday, the 29th of April with me, Fiona Cincotta, Senior Market Analyst at City Index. So we'll be watching out for Eurozone consumer confidence data in the European session, followed by jobs opening in the US session. Earnings, we'll be watching out for earnings from Visa and Coca-Cola, as well as BP and HSBC. So plenty to be cracking on with. This is just the start of the week, which really does ramp up with a lot of data and a lot of earnings to be watching out for. But before we get ahead of ourselves, let's just talk about what to expect from Eurozone consumer confidence. So Eurozone consumer confidence, we're expecting to remain unchanged at negative 16.7. This comes as economic sentiment is expected to just deteriorate slightly down to negative 94.5 from 95.2. But just looking at the euro US dollar, as I said, we've also got US jobs data in tomorrow. That's jobs openings, expected to remain pretty much in line with where they were previously, around the just off the top of my head, 7.5 million. That's down just a touch from 7.56 million in the previous month. Big week this week as far as data is concerned, as I said, for euro US dollar. Obviously, we've got much more data from Eurozone with GDP and also Eurozone inflation out later in the week. Those are expected to show inflation cooling and growth stagnant. And then in the US, we've also got GDP, inflation and non-farm payrolls. Now, this all comes as the euro has eased back from the 3-year high of 115.75. It's consolidating around this 113.50 level. Now, I think this is sort of in a wait and see mood. I mean, obviously, we've still got Trump tariff headlines coming in, but that slight softening of stance from the Trump administration has brought some relief to the US dollar, given it a little bit of a boost from its 3-year low. So as far as what to be watching out for, if we get particularly weaker than expected, I would be watching data from the US jobs openings. That could just unnerve investors slightly, particularly as we've got non-farm payroll, as I said, on Friday. So far, the US jobs market has been holding up. So any sense that it's not could raise those recession fears, pulling the US dollar lower. That would be beneficial to this pair. But at the same time, gains could be limited here because obviously the ECB are looking to potentially cut rates again in June, given that inflation is expected to cool to target 2% and growth remain steady at 0.2%. Then just what else? We've got UK, we've got earnings ramping up in the UK. This is a big week for earnings. We've got the banks in the UK, starting off with HSBC. We've also got then Lloyds, Barclays, and NatWest Group, as well as Standard Chartered this week. I think, as far as UK banks are concerned, the earnings can be sort of split into two camps, if you like. You've got the domestically focused, which is going to be NatWest and Lloyds. Then you've got the more internationally focused, which are Standard Chartered, HSBC and Barclays. Barclays potentially could be boding well given the strong performance of US investment banks. But HSBC tomorrow, obviously this does relate to the period before the trade tariffs liberation day was announced, but still we could still see some cautiousness coming in from HSBC's outlook. This is the FTSE. It has recovered from that low that we saw of the 75.35, risen above the 200 SMA. Testing here the 100 SMA resistance. Really do need to rise above that at 84.50 in order to extend gains towards the 86 level and beyond. But failure to get above that resistance does open the door to that 83.50, which is the 200 SMA. So do watch out for any weakness in earnings, could be putting that lower. As I said, BP is also due tomorrow. And then just finally, S&P 500. Your S&P 500 earnings really ramp up this week. Got 180 companies reporting. We also got the big four tech stocks, Apple, Amazon, Meta, and Microsoft, four of the Magnificent Seven. What their weighting is around 20% of the S&P 500. So huge stock, important stocks reporting. So, and particularly given the sort of macroeconomic outlook, which was very different to what it was when they were reporting in January. This is the S&P 500. It has picked up from that low of 4,800 in April, and we're testing this resistance level here around the 5550. 5,500 to 5,500 resistance zone. Need a rise above that in order to bring the 200 SMA into focus at 5750. On the downside, immediate support there at 5400 if we fail to push it up to that resistance. Disappointing earnings, concerns about outlook, and uncertainty or any trade headline news could potentially bring this index lower again. So I hope you like everything that you've had. And if you do, then please do give this video a like and subscribe for more videos like this.